ways to trading consistency in this video. Now, here's why this is important. When I hear from traders around the world, one of the most common things is, hey, I just need to be more consistent with my trading. And I can tell you from experience, this is something that you're always going to be working on. And for me, there are 3 things that really help. And I'll share those with you right now. And also I'll show you how to, if this is your issue, I'll show you how to get over that, okay? If you like what we're talking about here, you're gonna love the nakedtradingclass.com video. That's an on-demand training, and that's gonna share with you how you can take a little tiny account and grow it rather quickly, which is what we're doing right now in the Small Accounts, Big Profits course. You can go to nakedtradingclass.com to get those 3 methods. So let's move on to the doc. All right. So thing number 1 is that if we don't have the reward to risk ratio set in the right way, then we're going to be, it's like trying to paddle upstream. It's not a very easy thing to do. It's kind of like if you marry the wrong person, then you can run into trouble, right? So you got to make sure that you're going with the current. So let me share with you a couple of things you can do. What if you were just flipping coins as your entry? Would you still make money? You'd be surprised at how often you can make money by just having a really, really strong reward to risk ratio. In other words, let's say you just go 5 to 1. You risk 80 pips on every trade and you look to make 400. What you'll probably find, and I would encourage you to do this on your own, like most things, don't take my word for it. If you try this on your own, see what happens. See how easy it is to make money once you have the reward to risk ratio on your side. Now, the thing that's difficult is the psychology of losing so often and losing more often than you win. That's the difficult thing there. But I'll talk about that in just a minute, the psychology aspect of this. The other thing you can do is how tight are your stops? Because if your stops are super tight, 1, you're going to get stopped out more often, but 2, that will enable you to go for higher reward risk ratio. I know a trader who used to use, and I don't know if he still does, so I'm not sure, but he used to basically have like a 1 pip stop, and he was essentially looking for 100 pips. So he would get stopped out all of the time trying to catch a falling knife, so to speak, and then once in a while he'd have these wild winners that would ramp up his account, and he would shoot back up, and he would recover all of his losses. So if you have tighter stops, like on the 1-hour chart, you can go for bigger reward risk ratios. If you're trading the weekly charts and you have a 400 pip stop, it's going to be hard to wait for that 2,000 pip trade to get 5 to 1. So that's going to, and I actually think that most of us as traders, and I've done this, I'm guilty as anyone, we often have stop losses too tight because we want to have really high reward risk ratios. So I tend to side on the side of having my stops a little bit further out than I would look to do based on the chart. I always use this chart to place my stops. I know some traders just use the 50 pips on every trade sort of thing, but I usually side on a little bit looser rather than a little bit tighter across the board, no matter the time frame I'm using. Thing number 2 is, are you aware of your own biases? We all have cognitive biases, and these help us in everyday life. Most of these biases we have work really, really well if you live in hunter-gatherer society, which is, I believe, where these probably developed. If you are trading the markets, they will almost universally work against you. So these are things like recency effect or social proof or all these sorts of things. If these things are working against you, and they are, I mean, I'll tell you across the board, all of these things are something that we have to deal with as traders, then the best thing you can do first is become aware of them. Okay, so how aware are you? Number 1 is you can ask other traders. If you have a trader, so for example, the traders in my private forum at Naked Forex Now, I say when you come in, hey, let me know if you want me to connect you with another trader so that you can work with this other person, meet every week, and go over your trading. This is a great way to get good at trading. Most traders we have blind spots, and that's just part of being human. We're not exactly sure about where we sidestep, where we make mistakes. If you have another trader looking at your trades and what you've done over the past week, this is a huge thing. Even if you're just trading demo or trading in Forex Tester, it's a great way to figure out where your blind spots are. Having other people look at what you're doing is really useful. And in fact, the dirty little secret is that bank traders, when they leave the bank and go off and trade for themselves, or if they start a little fund or something like that and get some investors, they almost universally fail. And the interesting thing is why. The reason why this is because they have a risk manager at the bank who's making sure that they don't take on too much risk. As soon as you go home or start up your own fund, you may not necessarily have that. So when you have somebody and you know somebody's going to be watching your trades and talking about your trades every Saturday or Sunday at the end of the week, it's a great way to use psychology, which is called the Hawthorne effect, but to use psychology to get to a point where you're actually making the right decisions, because you know that you're going to be called out on those at the end of the week. You just have to allow this person to call you out on those, right? Write down your thinking. So if you're journaling, you will not only be able to identify your execution mistakes or challenges that you're going through, but you will also see psychologically what's going on. So for example, we all have issues with money, or most of us have issues with money. When I say most, I mean 98% of the population. So unless you had like a really rich uncle or your parents were extremely wealthy and you liked them, and that's the key here. For example, my grandfather had a chance to be one of the founders of Xerox. He chose to say no, which with hindsight bias was probably a poor decision. But if he would have done that, I would have had someone in my life who had a big pile of money, and I really respected my grandfather. That probably would have made it easier as a trader for me if I had a rich grandfather, a wealthy. I mean, he was great. He had plenty of money, but he would have had a lot more money had he been one of what they call the apostles of Xerox, the 12 founders of Xerox. He would have been in a different situation altogether. So that would have been a role model for me. But most of us don't. We don't have wealthy role models, so we glom on to the ideas that we're told as kids, like, oh, he had to screw people over to get that money, or only the ruthless get wealthy, or whatever. Money doesn't grow on trees. All these sorts of things that you hear as a kid, right? So that affects you because you don't want to become a wealthy person if you think wealthy people are idiots or jerks, right? Okay, so let's move on to number 3. Your psychological attack plan. This is kind of related to number 2, like I was talking about, having these role models or these schemas in our minds. Schema is like a psychological term. Psychologists use that term. Like, you have this schema of what it means to be a ruthless, wealthy person. Well, if you know that you have psychological issues, what can you do? Well, you need a plan. So that's one way that you can become more consistent as a trader. You have a plan. By the way, if you want to learn more about growing an account quickly, go to nakedtradingclass.com, nakedtradingclass.com, and you'll see how to grow an account quickly. I don't know if I mentioned that. Anyway, 3 ways to take a little tiny account like we're doing right now in the Small Accounts, Big Profits course. Take a small account and grow it really quickly. So your psychological attack plan might look like this. What are your challenges? What are your mental challenges? Well, I might have an issue with holding on to winning trades. It might be a situation where if a trade is in profit, I really want to cash out because I haven't had a whole lot of those winners, so I need to cash out quickly. Or one that cuts close to home for me is when I first started trading. When I say first started trading, I mean like the first 4 years, I would move the stop loss when I had a losing trade. If the market was going to look like it was going to hit my stop loss, I'd move it further away so I would give the trade more time, because of course it was the right decision. The market is going to go my way, right? I just need to give it a little bit more breathing room. And that was my terrible mistake, because I would eventually take these really bad losses. And that's basically what kept me in the hole. So, and then where that comes from is I'm trying not to lose. I want to be a winner. I don't want to be a loser. So if this trade looks like it's going to be a loser, we need to change it so that I'm able to become a winner. It's also the reason why traders will look at martingale strategies. So there you have it. So what are my mental challenges? What am I working against? Journaling can really help you with that. And the other thing is, what's my subconscious programming? What is my subconscious telling me? What is it telling me about wealth, about money, and about traders? Is there something going on in my subconscious that is not really aligned with my monetary goals as a trader? If so, I can use things like subliminals, and you can go to Inner Talk. Inner Talk has great subliminals. I can use things like hypnosis. I can go and see a hypnotherapist to help seed my mind. I can even use meditation, and meditation with a mantra that keeps me on point. So the point is here that you can reprogram your subconscious. It's up to you. You don't have to let the environment do it for you. Most of us just let the television, the news, everything we read, the magazines, we let those program our subconscious. Instead, what you can do is take advantage of your own ability to reprogram your subconscious so that your subconscious is aligned with your conscious goals, and that will definitely reduce the friction. So that's another thing you can do. I hope that this has been helpful. I hope that you find these things useful. And I hope that you go to nakedtradingclass.com to get more information about growing an account quickly. If you like what you see there, hey, who knows, you may join us and in the Small Accounts, Big Profits course, which is going on right now. I wish you happy trading, and I'll see you in another video. Take care. Bye.